I'm going to teach you guys 3 tips that you should know for trading psychology. So the first tip would be 2 brains, emotional and logical. Second would be colors, and these you can implement right now. You can implement all these tips right now, and they're gonna make you a way better trader. And the third tip is so if you do these 3 alone right here, my bad, I gotta do this or something. Minimize that, take that away. And then Streamlabs, you guys can see it. Alright, so these are 3 tips that are gonna boost your psychology like right away and get you guys where you need to be. Thanks for the tip. So the first tip is going to be your 2 brains. You got your emotional brain and you got a logical brain. Now that's very important because trading is all meant to make you jump into your emotional brain. Like if I open up a chart, another chart. If I open up a chart and then let's say it's a brand new chart somewhere. And that's how most of you guys' charts look right now. This is the average person's chart looking like this. It's you know, big red candles, giant green candles, and it's like giant spikes going up, giant spikes going down, and then when it drops down, it's dropping down really quick. It does things that make you react emotional because the markets move off of the overall human's emotions. That's why most traders, Warren Buffett even, he buys when people are fearful. And so I'll show you guys what that means. When you see a big red candle right here, that's fear right there. That's fear coming into the market. So he buys into fear. He sees people are fearful. Big red candles are fear. Warren Buffett's coming in and buying. And then he sells when people get too greedy. Oh, look at this giant green candle. People are super greedy. And that's greed. And greedy. Oh, people got too greedy. So when he sees people too greedy, he sells. And if I go to a longer time frame chart, it's shooting up. People got too greedy. Warren Buffett sold. It dropped so hard that people got fearful. Like, oh no, it can go to 0. Once you start saying Bitcoin's going to 0, you see news like that. It's going to 0. It's going to 0. It's called fear, and that's also a time to buy. For example, like you know, it's a lot of stuff going on in the news with like Fed rate hikes and wars and stuff that go on and all this stuff. Those are fear moments where it's like, is the market gonna go to 0? Like people, you can just look at people, you know, see the type of stories they're running. Is it a fear story, like, or like it's fearful, or is it a story where it's like JP Morgan, like when crypto was up here, he's like, Bitcoin's going to 100K and it was up here. That's a greed story, you know. You're seeing greed, and the market drops after greed. So that's why psychology is important. Understand fear and greed, and knowing that. And here's a tip that you guys can do. This goes into the second tip: colors on your chart. So when you see all these colors on your chart, right now you guys have no money, probably have no money in the trade right now, so you can see these colors all day. They won't. You have no emotions. You're in your logical brain. There's no money on the line. Now, if I take my money and I put 100K in a trade right now, right? I put 100K in the trade at the top, all the way up here. I buy it at 100K. And I see this big red candle right here, this big red one. Now my emotions just kicked in. It's like, oh snap! I just 30K. My money's down. Like it's falling. Is it gonna fall to the zero? My emotions started kicking in, and every candle, every green candle, every red candle, every, you know what I'm saying? These colors are not good for psychology and emotions. And you can use them as an expert, but if you're a beginner and you just want to save yourself the emotional baggage, then what you should do is switch a color up on your chart. You can go to a color scheme where it's just black and white. And it's a trick that you guys can use right now. You can implement right now. You can change your charts like this, and it's almost like reading a newspaper. Like sometimes I'll even go in my background. I'll make the background like a gray, and it's just like a newspaper. So that helps a lot because I see no green, no red. So it's like it's no emotions behind it. It's not. It's just boring and logical, non-emotional. So using non-emotional colors definitely helps. And this will definitely increase your percentage from 50%. So now we're already going up. Now you got this percentage are going up. You're past 50%. You're trading advanced. You understand risk management, equity curves. This is the final step now. It's all logic. The wigs, everything is very crystal clear and detailed. The next step is, and that's why you guys see me when I trade, like I really don't care for indicators too much. I have indicators that are like the top ones that are like apex indicators, but I'm not RSIs and MACDs and all this other type of stuff that mess up your percentage. Because what's the third tip? You have to test your strategy over 20 trades to see how accurate you are. So what that means is, let's say I put an RSI on my chart. I really don't want to do it because I don't like RSIs. Let me see. Let's say I put an RSI or MACD on my chart or whatever. I'm just not gonna do it because it's annoying. But if I throw that on my chart, I won't know how accurate that MACD is until every time. Let's say this is the MACD right here. I'll just draw one or whatever. MACD with the, I think they have the crossing lines on it or whatever. It's like crazy. I say this is the MACD, whatever, right? And I know for my trade strategy, I'm like, all right, here's how I'm gonna trade. Every time I see this cross on my MACD, I'm gonna take the same exact trade, and this has to be the same exact setup here. So I can only trade every time this crosses, the red line crosses down, and the market looks like this or something. And all those trades I just take and take them over 20 trades, and then you want to track after those 20 trades how accurate you are in your percentage, because when you're using proper trading psychology, you understand that one trade doesn't determine the next trade, but if you have a sample size of 20 trades, it can explain to you more about how accurate your strategy is. You know what I'm saying? So you guys want to use sample size. You guys want to understand that, like, what sample size am I using? How accurate am I over 20 trades? Don't think in terms of one trade. That's why you see expert traders are like, oh yeah, I'm up for the year, I'm up for the month. They think in terms of 30 trades, 300 trades. They don't think in terms of one trade. They're never like, I'm up for one trade, or yeah, this next trade is gonna be it. They never think in terms of one trade. They always think in terms of more than one trade, 20 trades, 30 trades. So you always want to think in terms of the month. Like, yeah, I traded the strategy for 20 trades and I'm up. And 20 trades can happen in 2 days, like, or even one day if you're scalping and stuff like that. I had one night where I did like I actually got to count how much trades it was, but it was a trade every 5 minutes for like 10 hours. So it's like, let's say 10, like, it was like 100 trades in a night, and I grew this account from $50 to like 30K in one night. It was the craziest night I ever had growing an account, and I was just like, that's when it ever. That's my second 30K in a night trade. Now it's more common because I have a big account, but from small accounts, it was just like, it's because I was taking a large amount of trades, and I was using this equity curve simulator, and I was making sure that all my trades lined up within the properties of I needed to make this amount of money I wanted to make in one night. So you guys can change your life in one night with trading. You can have that night, that giant night, where you go out. This is how I did the $50 thing. I had the $50 in the account, and my win probability was playing at 75% accuracy, and I was only going for a 2-to-1. I didn't understand too much about risk management back then, but I understood it enough. And I did 100 trades and one line, and every time I risked 10%. Or I think I did 25%, but some trade I did 25, but I would just keep the same risk actually. I think it was at 25%. So I was risking 25%. So I knew that I would go up. Put on 50. I know all my equity curves are going to go up because when you trade at 75% accuracy, you can go for 2-to-1s, and it was a stressful way to trade. Like, it's not the best way to trade, like all in one night. Making sure you're 75% accurate, it's a lot more stressful, especially when you have like 100K accounts, you got $1 million accounts, you got more money on the line. You don't want to really stress like that. So as you get more money, you're going to change your trading style to where you can go for you can have a way better risk to reward and stuff like that. But I'll probably have a night where I go on here. I'll do one night. I'll just do a crazy flip, and just get the video out there so people can see like how possible this stuff is. Like, trading is so possible when done right. It's like life-changing money. You can go get a little job somewhere, and you can trade up. Like, you can trade. You can sell an old pair of sneakers or something. Like, put it in an account, and you can trade up an account. So you can change your whole life trading. I definitely recommend trading the right way. Don't just take on trading if you guys don't know the math. But those are 3 tips for trading psychology. If you want to know more about trading psychology, where I go into full detail about everything I know, the Trading Psychology Mastery course right here is where I have everything for Trading Psychology Mastery. I got chart patterns. I can teach you guys some chart patterns right now.